As March draws to a close, attention is still mostly on the upper half of the channel, though if price can't break over 84.30 by the first half of April, conditions become less favorable for reaching the 90s and entering the 1.618 portion of the channel. Though as long as price continues to close in the 80s and the 0.521 range of the Fibonacci channel, the chart could still maintain a neutral to even bullish stance rather than heading towards a major bearish reversal, which would only be the case if price began closing under the 80s and moving into the 0.520 range of the Fibonacci channel. In contrast, natural gas has recently seen signs of the longer-term bearish advantage returning, which puts doubt as to whether price can get back over this decline of the Fibonacci fan, and more importantly, decisively close back over $2. There would likely be continued pressure on the 157 to 148 range if price can't get over this fan line and the 193 level.